Welcome to the podcast, everyone. I'm here with Manindra Majumdar, founder and CEO of Tokenizer. Manindra, welcome to the podcast.
Thanks very much for having me, Eric.
So Manindra, I think, one of the reasons I wanted to get you on the podcast is I want to talk about with you, and particularly your startup, the intersection between traditional finance and decentralized finance. Now that could be part either blockchain, crypto, Web3. It's been hot in the news right now because there's been a lot of market volatility, let's call it, in lately. But I want to get your perspective. You're deep in it. So, let's start with the basics. For you, what is traditional finance and what is maybe decentralized finance? And you can definitely focus it on your startup. And I definitely want to talk about your startup as well.
Sure. Let's look at like finance industry as it is, and what we can call it institutional finance. So in traditional finance, you have to basically trust the institution, and the institution have to follow the rules and regulations of a country under which it's registered. And there's penalty if the institution does not, and there's protection from the country's regulatory all the way to the end user. So that's the trust system. It sort of like forms. Now, what Web3 is doing to finance, as well as several other verticals, is that it's sort of like moving that trust factor lesser and lesser to, or at least the burden of that trust, to sort of like contractual agreements with an institution, to basically coding and computing. So essentially, you put your rules and your trust on a smart contract, and then you and you deal with that. Now, that's the purest form of Web3 that's out there, that you completely trust the smart contract and the code, and sometimes things go wrong. There are hackers and various other things, and like it has happened with the recent Terra money scheme. So everything went according to the smart contract, but some people took advantage of it. So that's the pure Web3. And then now what's also emerging is sort of like combining the best of the both worlds. So wherever, in many cases, doing it and putting a trust on a smart contract that takes out a lot of the cost and let's say inefficiencies of doing it in the old traditional way, yet trying to bring in some of the protection of the traditional finance. So that's sort of like a third space that's emerging. I don't know if it has a name, but so there's traditional, there's web finance, there's Web3, and sort of like a mix of both worlds.
Interesting. I think we'll definitely probe on that, but I want to kind of talk about your startup before we get into like the deeper conversation about where Web3 is, where traditional finance is, and let's call it hybrid, right? So Manindra, why don't you talk about Tokenizer and what you do specifically and how you kind of fit in this kind of like changing dynamic in financial services that we're seeing right now?
Sure. So with Tokenizer, we're basically building a digital bank that on one hand offers you your fiat accounts and all the banking rails, like your debit cards, your ACH system, the wires, and then it also provides you a crypto custody and a crypto system, so you can store and send various Bitcoins, you can swap those coins and other things. And then because it's in the same app, you can move the funds between each other. So you can top up your Visa debit card with your Bitcoins instead of or you can pay out your credit card bills with your crypto. So that's basically our goal. I mean, essentially what we have been seeing is that everybody would use a separate apps. So if you have your crypto, and if you have your fiat, that would be, so you have your Wells Fargo is where you keep your money in, your salaries come in there and everything else. And then you have a separate wallet or multiple wallets for crypto. And I think those two worlds have the potential to sort of merge together. So you have one app to sort of like visualize your finances in both fiat and crypto, and actually manage and work with them together. And that's what we are building.
So in some respects, you're building the super app linking traditional finance with the Web3 finance in some respects.
Yeah, absolutely. Yeah. So on one hand, you get your benefits of both worlds.
Yeah. So, I mean, you're the perfect person to talk about this, right? Because I think, as you kind of highlighted, there's traditional and then there's decentralized finance, or Web3 finance, right? And then there's this very interesting middle, right? And you talked about trust, and I love how you framed that, right? In traditional finance, we've seen trust built up over more or less centuries, right? You know, it took Wells Fargo, it took Bank of America, it took HSBC generations to build the trust of a trusted financial institution. Combine that with the regulatory regime that every country has, that you have, and also the backing of the government, right? Especially if you're talking with fiat currencies. On the flip side, we have in Web3. I mean, let's look at crypto. It's relatively new. Let's be perfectly honest. In the grand scheme of finance, right? It's like 10, 20 years old from a technology perspective and from a money movement perspective. Do you think, and this is a question for you, do you think that the Web3 technology can scale and build that trust more quickly than traditional finance has? And why you think Web3 finance can build that trust faster than in the past? Mandira? Oh,
Hello,
hey,
you there?
Mandira, there you
Okay, I think
are.
yeah, I think we got. Okay, sorry. What was your question again?
No worries. We'll definitely cut this, by the way. So I think, you talked about being kind of like this third mushy middle between traditional finance and Web3 finance, right?
Mm.
And I liked how you framed it at the very beginning, where we're talking about trust. Traditional financial institutions, they built out trust over decades, centuries, right? Web3, relatively new technology foundation, they seem to be pushing that trust or trying to earn that trust in a faster way. Do you think they can do that, or are there impediments to that, or do we need to do something like Tokenizer, where like you said, you're taking the best of both worlds and building that trust with traditional tools, but applying it to, let's say, a new way of thinking related to finance?
Right. Well, I think that's a very big question on like how to build this new stack. It's definitely going through a paradigm shift in banking, and and I personally have like my own theory, which on hypothesis on where it's heading. So I think there's a role for both traditional finance as well as the crypto companies or Web3 companies, and or let's say digital bank companies. So that's also the other pillar, right? Who are building on top of on top of the traditional banking banks. What I think would happen is, so I think the banks, instead of I think there is very new competencies required for this new form of Web3 banking. So bank go there? Yes, but that'll be a completely different company essentially. So you pretty much take it up apart and put it back together, or do you have a startup that is built for that? So I think is usually more effective in doing that. So I think the startups will probably, were natively using this, a nimble team will probably get there first as a
Mm,
Web3 sort of banking. However, I think what would happen is, as we go, I think the overall stack of how a bank and a finance firm or the plumbing, I think, is going to change as well. So as the banks and the because banks have the benefits of a balance sheet and various assurances that they can provide with or without the country's regulation, and finance is going through not only the change about the technology, but also is expanding internationally every day, and is expanding internationally as a retail. So a single country's regulation is not always great. So I think the banks have those capabilities already, and I think can be used in a very interesting model where essentially banks in some sort becomes like, let's say, the back end aggregator,
hmm
on top of which other not the digital banks, payment gateways, and everything else will continue to be built, and they would sort of become that service that service base, or the capability based on aggregator, and then they would still make their money. So I mean, you could think of in something like the insurance and reinsurer model. So I think there is a potential that in many markets where that could happen. Just we can see already the trend going from like a challenger bank's perspective, building on. I think it'll go beyond that. So I think that the stack is going to slightly change, and then the end user can be brought by Web3 users who are then using traditional bank and their services as a stack.
That's an interesting model. And I think you've definitely been seeing that in traditional finance as well, right? In the United Kingdom, we have open banking, right? Where they're trying to make it easier to switch between banks instead of like taking weeks and filling out mounts of paperwork. It's almost instantaneous. So I think your insurer-reinsurer model, I think definitely makes sense in terms of explaining it. But one thing, we've talked about the technology pipeline, right? The technology stack. And I 100% agree with you. I think there's going to be a lot of replumbing, more or less, in the next decade or so when it comes to financial services. But what about the trust issue, right? I think, one thing I've heard, particularly in the crypto Web3 space, is, there's a battle between crypto evangelists who are like, hey, I'm all in. I believe in the concept and I'm willing to try everything, right? El Salvador is a perfect example, like they've gone all in into crypto. But then on the flip side, you have more, let's call it traditional finance people, right? They want to believe in the 100, 200-year-old institution like a Fidelity or a Bank of America, and they're very skeptical of crypto. Ignoring technology for a second, do you think the Web3 community, especially Web3 finance, they have a lot of work to do? Or is there enough momentum amongst early adopters that, they'll eventually come on board as regulations and as the market kind of settles itself? Because right now the market is still, let's call it, in the early stages.
Yeah. Yeah, no, market is definitely in the early stages, and like we are basically seeing firsthand the first wave of evangelists adopting this technology, right? But I think there is a significant leap that needs to happen between moving from this evangelist phase to sort of that mass consumer market. So one question is about trust, whether you trust the bank or this. The other thing is about protection. So in terms of let's say for everyday regular citizens, it's like whose main interest is not so much on the technology itself, but in the protection of their assets. So how much of that will they do on Web3? I think the Web3 stack will have to get together to sort of provide some sort of protection. Now that could be provided to some extent by some sort of like a pool of funds or whatever being created for events and things like that. So I think ultimately in a very long run, that will potentially happen, that there is a protection that's given against, clawbacks and various things. But until that happens, I think it'll be very difficult for retail users to completely jump the board. So that's what I'm thinking, that they'll see it as so a lot of people see Bitcoin and Ethereum and all this mostly as an investment for either speculative or long-term, right? Long-term assets. So that is a very different use. It's like you invest in your real estate. What we are aiming for, and actually a lot of these evangelists are aiming for, is not just as investment assets, but as something that you would use day to day as a utilitarian purpose in life. So moving from investment asset, I think that can happen much faster. Already JP Morgan is saying crypto is the #1 asset, not real estate anymore for other banks. So I think that will get adopted way sooner than the second one, which is all the retail users and just citizens, not developers, would like trust the completely Web3 wallets to have their life savings or their salaries and everything in it. So I think a lot of things need to get together in Web3, and there is a gap. Nobody knows if Web3 protocols will cross that bridge to be able to provide that kind of protection. So I think in between, I think regulation could some sort of do some step in terms of insurance and other things that people could buy for the personal hacks and other things. Right now it's very difficult to get those. So I think there could be some mix of what regulations and insurance can do before people can have this full on trust. Because if you're going after with insurance, you're still trusting an institution, and maybe not a bank, but the insurer. So I think there's a huge gap that has to be crossed to move from evangelist to a utilitarian world of complete Web3 banking by everyday citizens. So, but there's people are building it. I mean, one of the most positive side is there's a lot of developers and a lot of people putting their blood, sweat, and energy into this. So big chunk of our population who can build things is building on blockchain, right? And usually, like in our society, when so much of energy and creative effort is moving into some direction, we are finally able to achieve it. Maybe not in the same way that we are thinking right now. So that's why I'm quite positive that maybe it's a slightly different way that we're not thinking right now will eventually come out, just because of the enormous amount of development that's happening in this space. Like I was discussing the other day, like I would love to read a book and other things, but there's so much new development and new things that happens in crypto and blockchain every day, that if I haven't read blockchain updates for a week, my knowledge would be ancient. So I think we will come up with a solution on how to cross that gap eventually.
Interesting. And I mean, there's so many things to tease out from what you just said, but I think we've kind of been dancing around one of the ones I want to ask you about, which is government regulation, right? In your insurer model, like you said, it's more private enterprise. But you kind of hit the nail on the head that makes regulation difficult, particularly by government entities, which is the global nature of Web3 and the technology itself, right? Having, like the United States or China do something doesn't necessarily create for a unified framework, right? Right now, we're not only in the Wild West, but we're moving towards this Wild West patchwork where, what the EU does is different from China, is different from El Salvador, different from the US. And there's a little bit of non-conformity. And with traditional finance, yes, every country has different regulations, but there are those commonalities. Like if you look at the SWIFT payment network, right, where for international transfers, more or less that's a standard that allows money to go from, let's say, the United States to India or Thailand or whatever. A little bit broken telephone, but that's beside. So my question to you is, do you think government will have a strong hand in building that, let's say, common framework or for the mass consumer? Or do you think government will just be another player competing against the Web3 and traditional finance organizations?
Yeah, I mean, for Web3, I think you said it right. It'll be extremely difficult for governments to sort of like build a fully global sort of a regulatory umbrella under which everybody could participate. However, I think one of the things that the governments can do, and maybe that's a good starting point, is what they're already doing is doing their CBDC, right? A central banking digital currency, is basically a blockchain version or a digital version of the coin. On that, they have full control. So on terms of like everything that they would like to do, so they could enter their protection systems, insurances, everything, whitelisted wallets, labels. There is a lot of scope to be done for there, and that could be the first step of sort of like testing the waters on what even a crypto regulation would look like, because we actually don't know on what it would look like. So I think that would probably like happen first, and then I ultimately, if there needs to be a global regulation, there needs to be a global body. I don't see it any other way, or everybody just controls their. We're moving to effectively to a multi-currency world, where there has been multi-currency world anyway of international currency, but not for day-to-day use. But we're moving to a day-to-day multi-currency world. And then, so governments can control their own. So there's the USD version controlled by United States. And then people have a choice that, okay, now I can go with this USD coin back with US government digitally on the blockchain and everything else, and I get this protection levels, and these are my pros and cons, or do I go with Bitcoin and I get these pros and cons here? I think they will just get a choice of menu on a few things. There's more assurances and there are cons to that, and then a few things there are not. So I think we'll probably move towards that, a slightly different world of finance with different coins and different assurances provided by depending on the coin and the network that we're using, versus right now, whether you're using a Citibank or you're using Deutsche Bank, you pretty much get the same assurances from all of them. I think that's so that it could emerge at a slightly different model or different level of insurance based on your coin that you're using.
Interesting. So this leads to an interesting question, because you kind of were advocating for a global body, right? And that's kind of like the antithesis of blockchain or crypto technology, right? It's supposed to be decentralized. We do not want centralization. But on the same statement that you just made, right, this basket or multi currency basket, right, will probably expand because, hey, we can do this electronically. The transaction costs might be reduced because it's all electronic. So I can use the USD CBDC versus the digital yuan versus the EU versus Bitcoin, etc. So how do you kind of reconcile like the need for more or less a global centralized body with
Yeah.
the underlying technology, which is about decentralization? It's like, to your point, I can do whatever I want and I don't need to get the approval of some central body.
Yeah, I did say there should be a global body, like if we want to apply those rules. However, I think it would be extremely difficult to get together behind something like this, and like putting together that framework, and may in some way defeat the purpose as well. So I think we may just have just like we a multi regulatory world, basically, where we may not end up with the global regulation, but we will end up with regulation based on not only the coin but network. Like you can choose different network. So I mean, we have, so United States, for example, or the Chinese yuan, which coin you're using, and then you can also have a network that, let's say, US supports, or a group of country can support together, which could be as big as, let's say, all of the NATO countries or all the all of the main governments or UN, a network that they support. And within that network, I think, will have a lot of control or assurances to give. So control and assurances, I think, come hand in hand together, and then people can pick on what they want. Also, I mean, this some of these problems can also be solved. Also can solve with code. So essentially, already there are protocols coming up for digital identity. So if you can have identity on chain, then we are one step closer to have some sort of an on-chain governance model, primarily getting there with a code base, right? And then there could be insurances. So we have just scratched the surface on how insurance can be provided on chain, right? I mean, if you look at Compound and most other, all of these lending protocols are actually, in some sense, insurance protocols as well. They're basically insuring the lender from, from certain losses. So if you expand on top of that, and then identity, there could be a way to build up global pools against verifiable hacks and various things, which could be then I think, yeah. So on-chain liquidity or on-chain pool that provided insurance, and everybody who participates in those pools, they will have to have a monthly subscription or a monthly payout or whatever it is to keep that pool funded and running. So there is a chance of building, sort of solving this problem, maybe in a way that we have not really put serious effort in, but in the future we will, is that building the entire governance on the insurance system on the chain itself, and not by countries regulatory. So that could be the third option.
Now, it's interesting what you brought up, because I think you kind of hit the nail on the head, right? In the sense that even though, let's say, there won't be a global body, what we're building with Web3 Finance enables people to have varying levels of sophistication in terms of how they want to manage their investments in the Web3 space, right? To your point, if I'm the United States and I have certain protections and protocols and regulations, I can control that in the country, right? And my citizens can adopt that. Or because they can easily transfer their assets electronically outside of another country, they can diversify, right? Depending on their level of financial knowledge and sophistication. So that's an interesting one. It brings up another interesting question of, in this new space, right? Whatever you want to call it, where you have traditional finance players, you have Web3 finance players, you have unknowns, right? Where do you, if you were going to put your bet, right? Obviously, you're a little biased because you're a startup founder, right, in the Web3 finance space. But where do you see the biggest growth, let's say in the next 5 to 10 years? Is it traditional adapting and introducing like some of those traditional finance techniques into the market? Or to your earlier point, because more or less startups like yourself are clean sheet, the knowledge is changing on an annual basis, you'll have the advantage, but it may fade over time. So where are you seeing the market right now? Who do you think, even though it might be a biased answer, will win in the next 5 to 10 years in this new financial space?
Right. I mean, it's a really big space, but I think definitely in the beginning, creative, nimble team will probably get there faster, right? And then it's a question of like how, I think ultimately there's going to be a merger for sure of everyone who's like, and big mergers are building up traditional companies and is sort of like crypto companies. But I think the crypto companies who build natively on this stack will get there way faster. I mean, that's just really how technology works. To build something great in most of this world, and this, you don't need teams of thousands. Actually, to build it and get its core working, you actually need a very small group of people. And then on top of that, you can add your customer service and everything else that the enterprise needs. So then you need all of that. But actually, a nimble team, a group of developers, I think, can get together and launch something really fast and iterate on it really, really fast. So I think there's definitely, at least in the next 5 years, I think they will actually get there faster. And other companies can sort of like the traditional companies can look at those plays and sort of try to get there in some sense. I think they're already looking at it. Obviously, pretty much every major bank and financial institution is putting in resources, and they would be testing internally, because obviously, like, what happens is, for a startup to launch, and when the day one there would be 100 users, it's 1,000 user. So it's a very different kind of iteration that they can do versus an enterprise. When day one you may have 1 billion people or 1 million people using it, and a very small bug is going to be, the effect is going to be exponential. So that's the con of enterprise, always has been. And so, which is why I think the startups will get there faster, and ultimately we'll see some sort of merger between the two. I think Coinbase is a very good example, who could build that exchange versus before, let's say, traditional exchanges, right? And is actually valued at higher than traditional exchanges as of now. Its market cap is bigger than, I think, New York Stock Exchange or NASDAQ. So I think that's an example of how that could be built.
The valid example. So Manindra, usually on this podcast, I leave the last word to our guests. So if you were to leave a couple of thoughts for our audience in this space, in traditional finance versus decentralized finance, what would you say? What should they be looking at? What should they be thinking about as they delve more into understanding the new age of finance?
Right. I mean, from a perspective of like a traditional finance company, or you mean like a startup?
Either. Whatever your preference is. Yeah.
So it's a very open question. Okay. So I mean, in terms of like, Okay, the way I like to think about these projects and products is ultimately it's a technology that's me is a means, is a tool to serve certain needs, right, in a society and to people. So I think while we're applying all of this, whether it by traditional or by developers, I think it's important to sort of like keep that always on side, because sometimes evangelists will go very far just for the sake of advancing a technology, and that is fine, I think, in certain pockets. But I think also a set of developers need to constantly see what are the actually utility benefits, and same goes for enterprises when they're putting in not just for the sake of now we are blockchain based company for enterprise, but actually what are the benefits. And I think we can come to provide to consumers. I mean, everyone end of the day serving consumers on a better mix of products and portfolios that they can use. I mean, so right now, I mean, let's say overall crypto and Web3 and banking finance, what's the ultimate use? Well, for different for retail and businesses probably, but for retail, they're looking for a way that they can store their money, use their money, and potentially save it for a long term or short term, right? So those are like the key use cases, and I think we should look at how each of them helps. There's one other thing, by the way. As we move between countries in the first world and third world, the use cases and benefits actually do change. So in US and a lot of the first world countries, when you're building for and the market is there, actually it becomes a good to have. Okay, you have blockchain also, but you could also store it as on into the local bank. But that is not really true in a lot of other countries where your local currency is inflating, and you're going through hyperinflation. So actually you cannot even trust or store your currency in local currencies. And then also your banking system is broken. For example, I mean, look at Venezuela and many countries. So there, this provides this is a lifesaver kind of a thing to sort of like build for those markets. And there are many markets in Africa and Latin America where that's true, where the crypto becomes sort of not just good to have, but a must have for certain people, because all you need to participate is the internet connection, and and most of the tools are free. So I think the benefits vary depending on where you live.
That makes a lot of sense. Well, Mandira, this was a great conversation. I'm sure we can definitely talk more about it. But thank you for participating in the podcast, and look forward to future episodes.
Sure, thanks for having me. Thanks, Eric.